Kick. Nate Allred, found it. So good to be with you today. Happy Ballon Trade, everybody. We want to wish you a happy Valentine's Day and let you know how much we love trading, how much we love you, how much we love the markets. We're just all full of love today. So, at any rate,
it's a very lovely day.
It is a lovely day, yeah. Especially here in Utah. So, anyway, just a reminder of the Ballon Trade. This is the month of the Valentines, and so we're doing that competition. Show us the trades you love. Post them on our Facebook page. Anything, you know, it doesn't matter if you're trading through apiary or through your own brokerage. We're just really encouraging the active trading. And so to encourage that, we're having you post to the Facebook page any trade results, winner, loser, doesn't matter. Just post it to our Facebook page, and at the end of the month we'll draw, some lucky person will get a set of apiary fund silver. So that might actually be of value here in the near future, yeah, based on what we talk about today, huh?
You bet, yeah. So yeah, in fact, that's a great lead into to what we are talking about. We're talking about CPI, correct? So just a little definition on what CPI is. It stands for Consumer Price Index. So what the government does is they take a basket of goods that everybody buys, clothing, food, you know, milk, you know, whatever. And what they'll do is they'll take this basket and they measure it and they say, okay, what's the change in price of a gallon of milk to last month versus a gallon of milk this month? And they take all of those goods and put them together.
Milk always goes up.
Milk is always going up, yeah. Everybody drinks it.
Just like the gas station, right?
Right, exactly.
Gas at the gas station.
So they take this basket of goods and they say, okay, what's the difference or what's the change? And they use that as a indication of inflation. So obviously, when we're trading currencies, we know that inflation is a huge driver in the currencies market, right?
Yeah, absolutely.
In fact, that's the underlying thing that drives the currencies market is interest rates, right? And the Federal Reserve, they are going to drive interest rates based off of, or their set policy right now is that they're going to drive where interest rates go based off of inflation, right?
Absolutely.
So we had the CPI come out today. Maybe you could tell us a little bit about it and why it's important today as opposed to, you know, last month's.
Yeah, I think, you know, Nate, you and I have been around this industry long enough. It seems like, you know, what's in fashion today, you know, what indicator is going to be in fashion today, or what news event is going to be in fashion today. And it seems like, you know, throughout the year, the focus tends to shift on to different things. You know, it's just like fashion. And you know, today, all eyes were on the CPI. You know, everybody for the last week have been talking about the CPI. You know, what is it going to do? What's the number going to come in at? Is it going to print hot? Is it going to be less? There's a lot of uncertainty right now about that inflation number, and I think you're absolutely right. You know, if you think of the entire economy, you know, it really revolves around this hub of inflation and interest rates, right? Mm-hmm. And so as traders, we're constantly looking at what are the inputs, you know, what is going to influence inflation? Is that inflation going to influence interest rates? If that influences interest rates, then you're going to get money flowing this direction if it goes up. If it goes down, you're going to be watching money flow a different direction. And so everything is really focused around, like you said, that interest rate and inflation.
And we've seen an increase of inflation, or it's been running hot this last little while, right? And so isn't the fear that it's going to pick up, right?
Well, yeah, it has been running a little hot, and that's what, you know, a little bit of the recent turbulence that we've had in the market has been related to that. And so, you know, that's why this particular CPI announcement was so big, is because everyone was, you know, this will influence Fed decisions, and there's a Fed meeting coming up in February. So, chances are they're going to be looking at the data that was reported today to make decisions about whether, to raise interest rates either this month.
So as a trader, I think that the people were looking at it to front run what the Federal Reserve is going to be doing come in February.
Yeah, a front run, absolutely. But we had something interesting happen today. Can I?
Yeah, please.
Do you mind if we just kind of show the group here? So the announcement came out this morning, and immediately the market dropped. So the announcement was that we ran a little hotter than normal, right? And so what we saw is the euro drop, the dollar gain, right? Which I would expect.
Right, because isn't that inflation fears, right? If you have inflation, that means that there is a tendency for money to move towards safety, right? Or safer investments, which would be US dollar or US dollar strength, which is what we saw, right?
Yeah, absolutely. The idea is that there's a flight to quality, number one. Number two, if that inflation rate is getting hotter than we expect, which it printed just slightly hotter, then there'd be more of a tendency for the Federal Reserve to raise interest rates, right? And so higher interest rates, more money will flow to the country that has higher interest rates, all else being equal, right? So, any rate, we've got so we had this immediately the dollar strengthened, which is what we would expect, but then since then we reversed and we took out all of the gains from that initial drop in the euro and the gain in the dollar, and we've recouped. The euro's recouped, and it's on fire right now. It hasn't stopped running. So there's a little bit of a question mark as to why it would do that, why that kind of volatility, and why the initial response, and then follow it up with an opposite movement. You have any input or ideas on that, Nate?
So my thought is that as the number came out, we saw what we would have expected, but just like you were talking about, everybody and their dog is watching this CPI number today, right?
Yeah.
And so it's one of those things where if you're building up for a bigger move and you're expecting it to way overshoot the mark, and it undershoots the mark, but it's still over what expectation is, then they say, oh, it's not as bad as we expected.
Yeah.
And so we can take it in the same direction that it was already going in. And you see in the euro, and with U.S. monetary policy right now, it is for a weak dollar. And so you see...
Yeah, despite what Trump says, right?
Yes.
Mnuchin will say one thing, but Trump will say another, but... everybody knows the dollar is getting weaker right now.
Yes, exactly. I mean, actions speak louder than words, and the actions say that U.S. dollars monetary policy is weak dollar, for good or for bad, right? But and so I think it's because of that expectation, or that built-in expectation, that you see it saying, oh well, it didn't come out as bad as we thought. Inflation isn't as bad as we thought. So as they had time to digest the news, you see people saying to themselves, okay, well, it's not running as hot as we thought, so Feds are probably less likely to increase interest rates this next round. And you see for lack of a better term, front running, even though that's not really what it is, the short term, and the Feds are so long term that...
Right.
Yeah.
Another thing, immediately following that CPI report, retail sales came out, and retail sales were actually down. So, you had a little bit this morning, a little bit of conflicting economic data where, yes, the cost of things are going up, the prices are going up, but the sales are slipping a little bit. So that might have also influenced in, today's response. initially, when that retail sales number came out, there was no response, no immediate response. But, perhaps traders, big traders were sitting on the side saying, well, yes, it was a little hotter, but retail sales are down, so maybe let's just get back to what we were doing before, like you said. So.
Sure. Well, I think the lesson that I took from this is that as a trader, you always have to be aware of what's going on. You don't want to be hit with an increase in interest rates out of the blue and you have no idea why, right? And all of a sudden the price spikes on you. So number one, you always have to be aware of what's going. But this is a good example of how in a bullish market, bearish news is underappreciated.
That's true.
And in a bullish market, bullish news is overappreciated or overcompensated for. And so really what it boils down to, at least in my experience, is you trade off the price action. Trump can say whatever he wants. Janet Yellen can say whatever she wants, but at the end of the day, they can't lie about the price.
That's so true. And I think a lot of new traders, especially, they get into this idea that, hey, interest rates are going up, and so this currency should be going up. And in reality, price is what matters. And, being able to read and to align yourself with the movements in the market is so important, despite what it ought to do. I can't tell you how many times, Nate, I've heard traders say it ought to do this or it should be doing this. In reality, as a trader, my responsibility, your responsibility is to make money in the now, right? Mm-hmm. And whether it ought to or should or any of those things, that doesn't matter. What matters is it's moving right now, and are you on the right side of that market? So I think that's good because we tend to, anchor maybe a little bit too much what it should be doing and respond a little bit less because of that anchor.
Well, I think all of us at some level have an echo chamber in our own head, right? I think it's going up. I have my bias and it's going up and I know it's going up. And it's very hard, and I think that's one of the things that we have to learn as a trader is to step outside of our own echo chamber and say, okay, I've heard what CPI is doing.
Yeah.
Let's follow price, right?
Oh, yeah.
And that's really how you're going to make money.
That's absolutely true. Just looking forward, Nate, next, CPI reports happen once a month, right? And next month, do you think it'll have the same impact and influence on the market that it did today?
I'm going to go ahead and say absolutely not.
Yeah, I'm with you.
So, this was a build-up to the Fed policy that they're coming out with, and so the closer you get to that policy, the more weight that it holds, and the further you are away from it, the less weight it holds. The
more knowns there are in the economy. So yeah, I'm with you on that. Once they make that Fed announcement later this month, that information, they're not gonna be weighing as heavily on next month's CPI numbers. So anyway, make sure you know that you recognize that, traders, that a lot of hype was built into the CPI report. Next month, maybe not have any hype whatsoever. It could have all the hype again. You just never know, but chances are pretty good that it won't be the same as it is today. Just curiosity, Nate, in your opinion, what economic announcement does have a little bit of consistency in volatility? What would you say? Thoughts on that? I got pulled you out of the blue on that one.
What report has consistency in it? I mean, the most consistent is, I would say, is the interest rate.
Interest rate, FOMC decisions.
Yeah. So if it comes out as expected, you usually don't see any movement. If it comes out as a surprise, you see a huge movement.
Irrespective of what's happening in the economy, if there's a Fed rate decision, a lot of eyes are on it, right?
Yeah.
So I'd agree with that. Yeah. And then
So-
another one I would throw in that category would be non-farm payrolls,
Yes.
of course, on the first Friday. So,
Yep.
so those are two economic announcements that you should always
Those are
pay
two
attention.
juggernauts.
Juggernauts.
That you'll get smashed if you don't pay attention to them.
Absolutely. All right, traders. So good to be with you. We'll wrap it up today. Thanks for being with me today, Nate.
Thank you, Shawn.
Always look forward to chatting with you on these and
Happy Valentine's Day.
trading room in the morning.
Yep.
Yep.
Come on in and we'll see you in there. We'll make some money.
We'll see what the euro dollar does overnight.
Yep.
All right. Happy Ballon Trade.
Happy Ballon Trade.
And we'll catch you next Wednesday, same time. Thanks, traders. We'll see you then.